What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the overall market. We will also be covering the SoFi stock. And guys, that's virtually it today. All of the top 7 mega caps are now completed with earnings, okay? The numbers are out, and the good news is about 5 of the 7 companies did extremely solid, okay? We're going to cover some of the bigger earnings in today's video, and we're also going to be covering some competitors to SoFi, and we're going to see, where SoFi is heading into their earnings. If you find any of this information useful, be sure to subscribe to the channel. We will be keeping you updated. Be sure to smash the like button, and don't forget to drop a comment. Let's get into it. All right, guys, take a look. This is the top 7 companies, in the world right now: Apple, Microsoft, Google, Amazon, Tesla, Berkshire Hathaway, and Facebook. And guys, virtually every single earnings is now completed. We're going to cover the 2 earnings today, which is Apple and also Amazon. But guys, that's it. All of the big mega caps are now done. We're going to see how it's affecting the stock market right now in today's after hours. We can see here the market was extremely choppy this morning with a sell-off. US GDP fell at 1.4% pace to start the year as pandemic recovery takes a hit. So guys, that is not good. GDP is going backwards. I believe that's for a quarter. That's 3 months. So if we get back-to-back quarters, that is technically a recession. And we scroll down a little bit. Gross domestic product in the U.S. declined at 1.4% for the first quarter. This was below analyst expectations of a 1% gain. All right, guys, you can see they missed the estimate of a 1% gain. So that is not good. But, overall, from what I'm seeing from the top 7 companies, 5 of the 7 did extremely solid. Stock market news live updates. Stocks rally as market attempts come back from the weak sell-off. This was, later on in the day today. So we had that sell-off from GDP growth, but because stocks are so oversold, we had a reversal into the day. I mean, guys, the market was up, ridiculously. You can see the S&P 500 finished up almost 2.5%, Dow 1.8%, NASDAQ was up 3%, guys. This is what has been absolutely destroyed. A 23% correction as of a day or two ago. So the technology is definitely the best buying opportunity inside of the market right now. Let's get into the earnings. You can see here the headline: Apple posts big beat and 9% revenue pop, authorizes $90 billion buyback. EPS was $1.52 over $1.43 expected. Revenue $97 billion versus $93 billion. I mean, they absolutely killed it, guys. Gross margin 43%. iPad revenue, Mac revenue. Just, completely smashed earnings. And let's see what the stock is doing after hours. We can see here the stock is up 2% after hours, also up 4.5% on the day. So Apple, did very, very solid. On top of Apple, we had a Tesla monster earnings. We had a Microsoft monster earnings. Google was, a hit or miss. So guys, virtually every company, has completed their earnings. And now we're going to take a look at Amazon. Amazon shares drop following Q4 earnings that miss analyst estimates, guys. If we scroll down, revenue 116 billion versus 116.4 billion. EPS $7.56 per share versus $8.40 per share expected. So they did miss EPS, guys. Amazon stock down 10%. Let's see what it's doing right now. Amazon is down 9% in the after. So this was actually, the worst earnings out of the, top 7 mega caps out of, all of the companies. So they're expecting slower guidance. I believe revenue growth was like 7% or something like that. So it looks like a lot of things are starting to slow down for Amazon because they've just reached such a massive size. So all of the earnings are complete once again. Looks like Amazon had the worst earnings out of all the mega caps. All right, guys, we have Robinhood just reporting earnings today. You can see they had a 6% gain on the day, down about 8.2% in the after hours. And I have to be completely honest with you guys, I'm surprised this stock is not down anywhere from 20 to 30% after hours from what I saw happen with Teladoc and also Netflix. I am very, very surprised that this stock is holding up this strong. I mean, it is absolutely blowing my mind. If we take a look at SoFi, we finished up less than Robinhood on that day, only 4.8%. We're getting hit about 1.5% in the after hours. And I believe this has a big reason to do with Robinhood. And just a couple of days ago, I posted this on my Twitter, but I didn't do a YouTube video on it. Robinhood cutting about 9% of full-time employees, guys. If we scroll down, Robinhood reported 3,800 full-time employees as of December 31st. So do the math. They're going to be cutting about 9 to 10% of employees. And guys, to see this stock still rallying into earnings, it just absolutely blows my mind. Like, where is the big money coming from? Is it Robinhood, buying some of their stock, holding this bad boy up? Because this stock should have collapsed. I have no idea how they have continued to hold a larger market cap than SoFi with the type of earnings that they've been putting out. And as Robinhood is laying off, their employees, SoFi is, expanding parts of their, business model. Galileo plans to accelerate Latin America growth with expansion into Colombia, guys. This was literally, a month ago, heading into our, new earnings. So we are expanding the business, and Robinhood is, pulling the business back. So if you guys want to know my expectations for SoFi, I believe the business is going forward. We're not going backwards like Robinhood, okay? And that we're going to look at the earnings for Robinhood, guys. It is very ugly. Robinhood reports first quarter 2022 results. Total net revenues decreased 43% to $299 million compared with $522 million in the first quarter of last year. So guys, they cannot keep up with that trading volume that they've had. I've been saying this for the past 9 months. How is the stock not completely collapsed? It makes no sense. Transaction-based revenues decreased 48% to $218 million compared to $420 million in the first quarter of 2021. Options decreased 36% to $127 million compared with $198 million in the first quarter. Net loss $392 million compared with a net loss of $1.4 billion. So net loss did get a little bit better. Adjusted EBITDA negative $143 million compared to positive $115 million. I can tell you right now, SoFi is going to have positive EBITDA. SoFi is not going to have reversal growth like Robinhood. We're going to be going forward, guys. This is absolutely insane. Monthly active users decreased 10% to 15.9 million for March 2022 compared to 17.7 million. They are losing monthly active users. Average revenue per user decreased 62% to $53 compared with $137. So guys, every single metric is going backwards, and it's going backwards fast, guys. This is absolutely insane. These earnings are very, very bad. Let's take a look at Webull, take a look at some of the after hours movements. And we can see from those earnings, Amazon and Robinhood are the worst performers, guys. I've got about 93 stocks looking at in the after hours. So Amazon is down about 9.7%, Robinhood 8.4%. Guys, I can't believe this stock is holding up this well. I mean, this is absolutely blowing my mind. Affirm is down about 2.5%. We also have Lending Club about 2%. SoFi down 1.4% in the after hours. This stock has been getting absolutely whacked, but we know that, Lending Club, had amazing earnings. That's a lender. It's totally different from Robinhood, just, relying completely on, options trading and trading volumes, okay? When you're diversified, a business model not fully correlated to trading, I believe SoFi is going to have a very nice beat, especially with Galileo growing the way it is. Let's take a quick look at the top performers for after hours. And you can see we have Roku and Apple. Roku also had a decent earnings, okay? Unlike Netflix falling back, 50%, they're up about 3% in the after hours. Apple is, up about 1% right now. So not a lot of excitement on their earnings with that buyback. But as you guys can see, that's pretty much it for all of the mega caps. They are now complete. But I'm telling you right now, I believe SoFi is going forward. We are not going backwards with declining revenue, etc., guys. We're expecting about, 35 to 45, potentially 50% revenue growth heading into this Q1 earnings in the next couple of days. And if we look at SoFi's website traffic, guys, we can see, just after December, January, February, and March, there's just non-stop acceleration in website traffic. Do I know if this is 100% accurate? I don't know, but I believe the big reason why they're seeing a, increase in website traffic, my guess would have to be because of that bank charter license. They're absolutely, killing it on, interest, over 1 to 1.2%, interest, on your money sitting in the bank account. I believe a lot of people are flocking, to SoFi's, offerings of the company now that they are a bank. They are able to give people back interest, that don't want to invest in the stock market and just want to make money on their money sitting there, okay? So this is a big reason why I believe the website traffic is accelerating, guys, because of that bank charter and what that bank charter is now allowing SoFi to offer. Because understand, as soon as they got that bank charter, you saw that interest, increase dramatically. I believe it was at like 0.2, and then if you, lined up direct deposit, it jumped to 1%, then they increased it to 1.2% as the Fed is hiking up rates. So a lot of people could be flocking, to that direction to fight inflation without investing in stocks or other assets, okay? A lot of people just want to know their money is trying to make some money even with inflation out there. So this could be a big reason once again. And another good thing is, lending looks to be extremely strong from what I saw with Lending Club's earnings. And guys, we are a lender, and lending could have some strong quarters in the first half of the year. I know we had that negative GDP growth at the beginning of the video, but we're not into the second half of the year yet. We're in the beginning, and remember, a lot of things get priced into the stock market before they happen. The stock market is forward looking about 6 to 12 months. So a lot of this bad news could be priced inside of the market with that NASDAQ down, over 20% still. So I want to see SoFi blow out the earnings, guys. We just have to, get to the earnings and hope for the best. But it is time to put these companies like Robinhood in our, rear view mirror, because we are not going backwards. Once again, we are going forward. If you made it to the end of the video, I want to say I really do appreciate it. I enjoy doing this video for you. Understand the stock market right now is an absolute circus, a nonstop roller coaster. You're seeing companies sell off 50% after hours, like a Teladoc or Netflix. You're seeing an Apple have a monster beat, up 1% in the after hours. You're seeing Roku after hours say down 15%, now up 5%. Guys, it is a roller coaster. Understand the only way you're going to be able to win is have a longer term mindset of getting through this nasty inflation that we've had. Hopefully the inflation peaks in the next couple of weeks to months. That's all we can really hope for, because inflation is what's really killing the market right now. GDP growth just hit negative 1%. Guys, we have to get through these times and understand, I believe the best thing if you have a longer term mindset is dollar cost averaging, potentially every 2 weeks to every 1 month. Nobody's going to be able to time the market, and understand these mega caps have even fallen 20 to 40%. These are some of the most stable companies in the United States, economy. So you have to understand, we have completed all the earnings. Review the mega cap earnings. 5 of them have, very strong earnings. I believe 2 of them were a little bit weaker. And so the 7 of the biggest companies in the world are now completed. So take that data to see where the economy for America is going in the next couple of months, and that should give you a better investment strategy. But I believe SoFi once again is moving forward very strong with expansion of Galileo, into Colombia, and other, revenue streams heading our way with options trading, not relying on full options trading like Robinhood, declining revenue, declining users, declining paying users, guys. Everything is going very, very backwards fast for Robinhood. I believe SoFi is set to win because of their wide, diversified business model. Even though student loans has been extended for over 2.5 years, they continue to show strong growth in revenue, users, etc. Once again, my name is Kyle. Hope you have a great day.